OpenAI's charm offensive seems to have hit a bit of a speed bump after implying that the federal government would serve as a backstop for the company now that the startup is scrambling to reset the narrative and turn investors' attention towards the new revenue milestones it has. Mackenzie Sigalos is following that particular story, just the developments there are, and what we know is the latest from the clarifications coming from Sarah Friar and OpenAI.
And Dom, this was a rare public stumble for OpenAI, a company that has spent the year firmly in Washington's good graces. But this week, OpenAI found itself on the defensive. The company's CFO, Sarah Friar, suggesting in a Wall Street Journal interview that the U.S. government could help guarantee financing for AI infrastructure, a move that would lower borrowing costs for the massive data centers that they are racing to build. White House AI and crypto czar David Sacks quickly firing back, calling the idea of a federal bailout ridiculous and saying if one of America's multiple AI firms fail, others will fill the void. Friar has since walked back her comments, and CEO Sam Altman stepped in to clarify that OpenAI doesn't want or need government guarantees. Now, the one thing that OpenAI is actively discussing with officials is domestic chip manufacturing. Getting American-made silicon instead of relying on Taiwan is exactly why the White House took a stake in Intel. Altman also trying to reset the narrative, saying that they are on track for a $20 billion run rate this year and will hit hundreds of billions by 2030, money that will fund its $1.4 trillion in compute contracts. All of it capping a string of walkbacks across the sector, from NVIDIA's Jensen Huang softening his China remarks to Anthropic's CEO responding to a different offensive from Sacks. It's a reminder that in the AI race, White House buy-in is as critical as infrastructure, Dom.